Hello friends, how are you? Welcome to the channel. Today we're going to be talking about Cony, which is a YieldMax play for high yield investors. If you're new here, my name is Mike. The channel's name is Health and Wealth. Thanks so much for joining me today. To all of my previous subscribers, thank you very much for being here. So, um, in an online forum, somebody said, "Is getting into Coney too risky right now?" And I started thinking about that, and it's a valid question, especially with the recent changes in share price. That is a definite valid question for sure. So what I've done here is I've put together all of the information I can think of that we put together in terms of past performance as well as how it's doing right now. And I would like to go over that with you today. So the very first thing I want to make sure I put out there that this is not financial advice. I'm literally some guy sitting in my home office making YouTube videos, just sharing my story. So I currently have 183 shares of Coney, which by all means is not a lot. It's roughly $2,900 worth of money that I put in. Um, and my plan with Coney is to not put any more money into it. I'm going to set it, I'm going to forget it for 5 years. It's actually 4 years and 11 months now. I'm going to set it and forget it, but who's counting? And my goal is to put that on DRIP, dividend reinvestment program, or in this case, it's called a distribution. So, distribution reinvestment program, although I've never heard anybody say that before. But I had that one guy one time who was a stickler. These are distributions. It's true. They are. They're not dividends. It's different. So I do have it set up for DRIP here, and I do intend to set it and forget it. Now, a lot of investors out there are, especially in the YieldMax uh, area, are buy and sell and sell and buy. There's not a lot of holding happening with some investors, and I am one of those people. I can't get my hands out of the cookie jar. So what I wanted to do is put a lock on this cookie jar and never touch it again for 5 years. And so I've set a mental block that I'm not going to touch it. I can go ahead and mess around with my other ETFs, my other stocks that I have out there. But this one, I'm leaving it. And I'm going to just do a little science experiment here, a little math experience. We're going to see how it does 5 years from now. That's the plan. But the point of this video was because the person asked, is it too risky to get into? Um, I will say this, that it is important to understand your limits. It's important to understand what you're investing in, why you're investing in it, what is your plan with the money, what's the downside risk, what's the upside benefit, and if the upside outweighs the negative, then that's an investable thing for you. So for this video, I want to go over some of those negatives. I want to go over some of those positives to give you a better understanding of what this is. All right. So the first thing I'm going to do, I'm just going to open up YieldMax's website, and we'll go through this. Now, this distribution rate is its current distribution rate. That's as of yesterday, 87%. Now, that's annually, but also this number changes every single day. With the recent share price that has reduced, it has increased the distribution rate. Now, this is not necessarily true. What I would like to do is take you for a tour of all of the distributions that they put out here. The most recent one is going to be paid out tomorrow, which is Friday on the 10th, and it was the lowest one in a long time, if not ever. I think ever, 83 cents. Now, the reason for this lower distribution is because the share price has come down. Same with Coinbase's share price over the last month. It's come down 16%, and Coney's come down 26%. Now, part of the 26% is that distribution. The distribution date just happened. So not super fair today, the day after the X date, to say it's come down 26%, but it has come down. Same with Coinbase, which is a Bitcoin or a crypto coin play. Okay, so The share price, right? That's come down quite a bit over the last month here. That's part of the reason why the distribution was lower. Another reason the distribution was lower than previous months. I'll go back to the screen here so you can see it, and I will try and zoom in here so you can see a little better. So another reason why the distribution is lower. Generally, if we have lower distributions, it could be a couple things: lower volatility on the underlying stock, which is Coinbase or coin stock. That's one reason. The second one is that the fund managers at YieldMax don't are not successful on their weekly calls or their synthetic option, and so both of those could be reasons why the share price is down, but also why the distribution is down compared to normal. So that's important to know that yes, it is a lower distribution. For me, in my head, I'm going to say I don't really care about that because my goal is to leave it in there for 5 years and see what happens with the money that's within it, right? So 2,900 initially invested. Let's find out what could happen if everything works out positively over the next 5 years. We'll find that out shortly here. Let's take a look at Bitcoin itself. In the last month, is down 6%. So again, Coinbase is a crypto play. Bitcoin being the biggest crypto out there, but this is Bitcoin's U.S. price right here, $92,852 today. This trades 24/7, so it doesn't really matter if the market's open or closed, but Bitcoin is there. What I did is I opened up Chat GPT and I had a search here, and I'm going to go ahead and just open that up for you. I've gone ahead and copy and pasted it over. I wanted to share a couple of numbers with you. This is as of January 7th. The YieldMax Coin Option Income Strategy ETF Cony has distributed a total of $24.80 per share to its investors. This total comprises 15 distributions since the fund's inception in August 2023. Here's a breakdown of those distributions by year. So in 2023, Cony paid $4.74. In 2024, Cony paid $19.22. And then so far this year, as of tomorrow, it will have paid 83 cents. So the most recent distribution, 83 cents per share, that was just announced a couple of days ago. Now, I really love the little disclaimer at the bottom here. Please note that while Cony has provided substantial distributions, past performance does not guarantee future results. Well, the proof is in the pudding, right? If we go back to the website here, we can take a look at that exact thing, right? So past performance doesn't mean it's going to happen every single month. I think that's very important for new investors to understand that you're not going to get the same distribution every single month. Let's take a look here. Distributions can vary and may be influenced by numerous factors, including market conditions and the fund's investment strategy. For the most current information, it's advisable to consult official fund resources. And I really love this one. Stop relying on people on YouTube and Facebook or social groups to get your financial advice. If you're not somebody who pays attention to it or is invested in understanding how these work, then you'll definitely want to seek advice from a financial advisor. I can't overemphasize that enough. A lot of people out there are saying, margin, margin, margin. I'm all in. I'm going to get a HELOC. I'm getting a line of credit, and I'm going to put it all in on this. Oof. What's the downside risk, right? What happens if the market crashes tomorrow and doom and gloom and, war happens, more war. Donald Trump tries to take over my country. What happens, right? And then you can't afford to pay off your house and you're having foreclosure. So exercise caution. And I'm going to just reel it back in here to myself. I did that, right? With my $2,900 investment. It's not going to hurt me if that thing goes to zero. Life will be okay. I will move on and I will be able to afford to pay for my house, my car, my kid, life. Okay. So, invest with what you can and don't risk. Don't risk. I'm going to say that. Don't risk. That's what I'm going to leave it at. So just wanted to go over a couple numbers here with Cony. It is down to, if I go to the last 3 years here, close to all-time lows. Its all-time low was $11.34. That was September of this past year. So only what, 4 months ago, and now it's at $12.44. So a lot of people, they like to buy when things are low and sell high. That's the traditional way of doing things. So it might not be a bad idea to buy now, but do we keep seeing Bitcoin going down? Do we see Coinbase going down? Do we see the market going down still? That's what you want to analyze before you make that investment. Coin itself, $260 here. If we take a look at its last 3 years, it had some major slumps there in 2023. August 2023, let's go take a look here. So it was at $87 at that point. So what I've done is I've gone ahead and taken a chart here between the two of them. I just found a website called totalreturns.com, and I typed in Cony and Coin. So Cony is up top in the blue and Coin is in the, was that red? And you can see just some numbers here. I'll zoom in on this a little bit if I can, just a pinch there. But Coney overall return 120%. And then with Coin, 217%. Now, how did Coney get this total return? Well, that came from the distributions here, which I'm going to go ahead and just go over with you one more time, right? So right there, total of $24.80 of distribution. And if we go back to Coney, when it came out, it started at $18.42. So it's paid out $24 and some odd cents in that time in distribution. So if you're an initial investor of Coney and you just kind of did what I'm doing right now, set it and forget it, you've been paid back all of the money you originally invested into the fund. Your share price has definitely dipped here by $6 and some odd cents, but $6.02 since then, but you've recovered all your money in distribution. So for those types of people, they're probably fairly happy with their investment. I know I would be if I've had that total amount come back to me since 2023, right? So, a year and a half it took to get that back. That's very, very impressive. I've also done a quick comparison here. Now, this is dripcalc.com, dripcalc.com. It has not put into the equation here this latest distribution, but what I did is I put in $10,000 in each Coin and Coney. And so you can see the original price, 79 bucks of Coin, and then 1977 of Coney, give or take a few dollars there. At the time, you got 126 shares of Coin, but you would have got 505 shares of Coney. Dividends since then, $20,000 in dividends. And then there you go. It's missing out on the last dividend. So I don't fully trust this site, but I think it's just an example of if you drip your shares, if you go ahead and reinvest those shares right back into it, you're going to build and compound that fund a little bit more and more. Even though the share price has dipped, you're still getting that income every single month, right? It hasn't failed yet. There's still lots of volatility on Coinbase. Arguably, Bitcoin has the most volatility out there. I don't know if that's an argument or not. I think that's pretty well known. But and again, Coinbase looks after all of the coins out there, the altcoins and things like that. I keep referring to Bitcoin because it's the biggest one. But yeah, that's for me, this chart doesn't really do it for me. But this one here was pretty interesting. This one's called marketbeat.com. And what I did is I inputted Coney in here, and it comes up a coin option play. Individual stock, I know it's an ETF. I put in monthly distribution, and I did say yes to the drip, which means that the shares will automatically be reinvested. The distribution will automatically be reinvested into shares. So I put my number of shares, which is 183, put today's share price, $12.44. For me, I live in Canada. I get automatically taxed 15% on these distributions. Even though if you're from Canada, if you have a tax-free savings account, you will get auto taxed your 15% on these. But that's it. That's the only tax we pay on that one. And that's on all distributions. So initial annual dividend yield, I did put 70% in here. Now, this could change monthly, right? Could change daily. Remember up here, I showed you today it's 87. Go look at it tomorrow. Could be different. And I put 0 annual dividend increase. I put 0 annual share price increase. We're going to keep it the same price in our heads, in years invested 5 here. And so you're going to see I started with $2,900 and the ending balance is 47,308. The total return of 1,978% if all goes exactly as it is right now. What are the odds of that happening? I'm going to say pretty close to 0, but it's fun to play the game. And for me, that's why I've put this small amount in Coney, because I want to play that game. I want to see, what could happen if we leave that money in there for the 5 years. Down below, just some things of what could happen. So year 1 initial shares owned 183, year 2 335, 615, 1129, and then in year 5 2072. Pretty darn good for not doing anything, if you ask me. That's for sure. And I would love to go over the annual dividend here. It is distribution. It's $18,151. That's pretty darn good. Works out to around what, $12.50 a month, something like that. I could definitely handle that. Especially as one pillar. By then, I hope to have 5 other pillars built, and it would be nice if all 6 of those pillars are paying me $1,500 a month. That would be ideal. So you can see here, shares owned at the end of year 5. That number dramatically climbs here every single year as we drip it back in. If I change this up to 10 years of investment, you're going to see a massive, massive change here down at the bottom. Remember, year 5 was 3,800. If we look at year 10, I would have 79,029 shares in a perfect world, but we don't live in a perfect world, do we? So that is what I'm hoping to do. Would I invest in Coney? That's not for me to tell you. That's for you to think of yourself and understand the risks. But for me, I'm invested. It's a small amount. Again, I'm going to say that it's nothing too crazy here. Some people have, thousands and thousands of dollars in this. But my role here on this YouTube channel is just to kind of let you know what could happen in the negative, what could happen in the positive. So I want to recap that with you. The negative is the entire market could collapse today, or I guess tomorrow. Let's knock on wood. And your share value goes down so far that YieldMax says, oh my goodness, we need to do a reverse split. Let's take Mike's 183 shares. Hold on one second. And divide them by 5, right? Divide by 5 or even by 10. Oh my goodness, 183 shares brings me down to 18 shares. If they divided it by 10, they did a reverse split by 10 to make this $50 per share. That wouldn't be good. I wouldn't want my money involved in that, but I'm in it for the long run on this one. If it was on my Nvidia or my Misty and that happened, I would probably make a change, but because Coney is going to be here forever, locked in, not touching it, then we would find out what happens. So that's the negative. The positive is here, if it keeps doing what it's doing, by the end of year 10, if I kept it in there, I would have $983,000 sitting there waiting for me at retirement. And I mean, 10 years from now is the goal for retirement. I could definitely handle that nest egg for sure. Tell me what you guys think about that. If you enjoyed these videos and it brings any value to your life, hit the subscribe button. My goal is to get to 5,000 of you beautiful friends as subscribers to this channel. You've helped me grow so much in the last 5 months. I really appreciate your time, your comments, your friendship, just by commenting on the videos and liking them. So my name is Mike. This channel right here is Health and Wealth. I hope that you have the best day.